Hello, Marc from ADM Investor Services International, with some thoughts on performance of markets to start Q2. My first chart today is the US 2 5-year spread. And really, I think what all the first series of 4 or 5 charts highlights is how we've been trending sharply sideways over the start of the quarter. All the volatility that we had in bond yields has calmed down. The 2 5-year spread isn't going anywhere. My next chart is the US 5 30-year spread, which is also not really going anywhere. It's trending very much sideways. I think there are some obvious contributing factors to that, one of which is that the commodity prices have also calmed down. And my third chart today is the US WTI oil future versus the copper future. While they remain very much elevated relative to where they were, say, even 5-6 months ago, they are still actually trending very much sideways. The fourth chart, and this is an important one, because the calmness that we have is always helped by the fact that if we see some calmness in the both the dollar exchange rates as measured by the US DXY index and the Chinese Yuan dollar spot rate. So the fourth chart is basically the dollar yuan and the US dollar index. And again, what one can see is, having had a bit of a rally, the dollar index is trending sideways. And having seen that inordinate strength, which created quite a lot of volatility in Q4, we've seen a very quiet period now for the Chinese yuan. So this plays into the fifth chart, which is the VIX index, which basically is down into the teens. We haven't been into this area really on a sustained basis since pre the pandemic crisis. And I think that is it is the calmness of treasury yields, the calmness of foreign exchange rates, a relatively calm profile to commodity prices, which is contributing to this. Nevertheless, all this calm isn't quite does disguise that there are things going on which I think are well worth noting at the moment. Above all, what's been going on in China. And so my sixth chart today is Asian USD dollar denominated investment grade yields versus high yield spreads. The blue line on the chart is the investment grade yields. And as much as the spread has widened out quite sharply, obviously one shouldn't overplay this, but nevertheless, it's been quite a sharp spike. I think the observation that I've made on US dollar high yield, normal ones, indices before outperforming investment grade does concern me as much here as it does in the US. This has been primarily driven by concerns about state-owned enterprises in China. Above all, the concern surrounds Huarong, a major asset management company, or AMC as they call them in China. And as much as they haven't defaulted on any bond payments, there is concern that they will, and the bond prices have collapsed quite spectacularly. So my final chart here is of onshore bond defaults in China state firms, and comparing that in total defaults versus those from SOEs. And as one can see, there's considerable pressure here, and we saw a very large spike, and proportionately SOEs have become that much larger. And this is something we're going to have to watch very closely, because this will basically could have quite a lot of contagion effect in Asia dollar bond spreads. And those are the thoughts for this week.